Hello and welcome to Leaders of Tomorrow Season 10. It's been 10 seasons of empowering small businesses such as yourself in hand-holding and guiding you in your growth journey. I'm Sunanda Jayaseelan. On the show tonight, we're bringing you a part of a series of conversations that we do across the country. These town halls are to better connect with you, the small business entrepreneur. On the show tonight, we're bringing you takeaways from a town hall that we did in Chennai, where we're talking about the healthcare system and how technology is being used to propel it along further. Now, just before we bring you that in our second part, on the first part tonight, we're bringing you highlights of a conversation that we've had with the expert from the startup space, Anto. He's the business head, business banking and agri-business lending at IDFC First Bank, talking to us about what really is happening as far as the startup ecosystem is concerned. Also, we have a personal finance expert who's joining us, Babu Krishnamoorthy, Chief Sherpa at Finsherpa Investments, to talk about all the financial needs of India's small business entrepreneurs. First up, listening to the key takeaways and highlights of this conversation that we've had with our very special startup mentor and guest, Anto, speaking to us about a deep dive as far as the startup ecosystem is concerned. Listening.
On behalf of IDFC First Bank, I take immense pleasure in inviting this, welcoming and inviting this August gathering for the Leaders of Tomorrow event. After years, after months of virtual interaction, I think it's great to meet everybody in person. So it's a pleasure to meet you all here. So the way we have structured a little presentation here is on the startup ecosystem in terms of Leaders of Tomorrow, the today's MSMEs, the today's startups, how the startup ecosystem is evolving in India and with Chennai in particular and with some focus on the healthcare side, a brief about who we are as a bank and a little bit about the offerings that we have in the startup ecosystem in the MSME space that we can use to partner for our growth. So that's in short the content that we had. The stage is all set for Indian startup ecosystem to become the leaders of tomorrow in that sense. Today, we boast of at least 100, comparatively speaking, in the world stage, after US and China, we are the third largest ecosystem which is there in the startup space. We have close to about 105 unicorns, the billion-dollar valuation companies, a combined valuation of about $314 billion. 22 of them have come up in this year, and that's the rapidity in which the space is moving up. We also have another 100 plus, the soon-to-be unicorns with about $180 billion of combined valuation. That's the kind of rapidity in which the Indian startup space is evolving. Extremely vibrant, like I said, the third largest in terms of after the US and China, there's the third largest startup ecosystem. And therefore, the stage is all set for the Indian startup system to take up the next leaders of tomorrow. Chennai has particularly become home in the SaaS space because more than 1,000 SaaS-focused startups in Chennai, which is there. It's created a niche for itself in the SaaS space. We have seen some of the listings also which happen in the startup space in the SaaS ecosystem. We also have about 300 plus healthcare startups which is there. Some of the names which have been trailblazers, some of us we know, some of them like Freshworks, Zoho, Freshworks, some of them are quite popular names. Very particularly in healthcare, these are some of the startups which have been focused on healthcare space. The kind of healthcare startups, the focused healthcare startups is there, and these are the kind of healthcare startups in particular that we are seeing. These are some of the technologies that we are seeing people in terms of fitness, wellness, home Medicare, telemedicine. These are kind of the emerging spaces which we are seeing a lot of startups coming up, evolving, raising funds, growing fast as well. Okay, a little bit about ourselves. We are an emerging bank. We like to call ourselves as a challenger bank because a lot of things that we put out challenges the existing space. Our basic vision is to build a world-class bank right in India, which is guided by ethics and customer-first values, powered by technology, and be a force for social good. That's in short the vision which drives us in creating the bank that we are. To bring in world-class facilities in terms of both technology and services to people, with a motto of always being you first. So now, when we keep saying you first, always you first, it's just not a slogan that we keep having. It's a DNA which goes into every product that we build, for instance. Like for instance, in the savings account, while we have higher interest rates and all that, also the fact that we give monthly interest on savings accounts. It's just that it's an interest on interest. That little bit extra which always is there, which can be useful for clients. For example, in credit cards, we were the first banks actually the only bank in the country to revolutionize the annual rate for cards. Similarly, FASTag, in fact, we are one of the largest FASTag issuers in the country now. And I like it, keep going on and on. In each of the products that we have picked up those 5-6 things which have been pain points for clients, which have been kind of cutting corners in terms of making profits, and ensure that the transparency is brought in there, and therefore offer better and higher quality services to clients. And that's what we typically mean by always you first, and that's a guiding philosophy in every single product that we roll out. Something about the bank, we are strong, well capitalized, close to 16% of capital adequacy. We had 50% of CASA typically being the low-cost deposits to signify the strength of a bank, which one of the metrics which typically gets used. We are probably among the highest tier in terms of CASA deposits, which is there at 50%. And this we have kind of managed in the last 3-4 years kind of number. And I think probably we'll be the only bank which has managed it in that span of time. Serving over 30 million clients. And in the recent results that they did, we had one of the best ever quarters, which we had posted 474 crores of profits with a very strong growing balance sheet at about close to 40% kind of growth in the balance sheet. So that's in a nutshell a very strong, stable, fast-growing, challenging bank, because it's the kind of products that we put out, the kind of customer support that we have been receiving, the kind of people who have been banking with us, and the feedback which we have been growing. I think it has really helped us grow quite well in this space. One other thing that I would like to actually touch upon is on the structured solution desk, and this is something that has generated a lot of interest on the startup space. We have set up a structured solutions desk typically focusing on the capital raise. Like, for example, there has been several instances where the investor has got finalized, the capital has got raised, money is supposed to come in, but then the FCGPR for the earlier fundraise has not happened, because of which valuations take a hit, or you'll not be able to bring in the money. There have been instances where funds have come in, but there have been issues related to the 6-month KYC. There's been issue related to regulatory guidelines because of which money has to be sent back. So you don't want to be sitting at an end where you want to focus on raising that money, deploying it in a business, and scaling it up, right? You don't want really to be focused on sitting and working on breaking heads on the regulatory side of it. So we set up a dedicated structured solution desk, which focuses on all the regulatory guidelines with respect to capital raise. So that's something that really has found a lot of use in the industry. So that's in short what I wanted to communicate. It's an absolute pleasure meeting up with you. I'm sure we'll interact post the discussion also, and more than happy to be in touch with all of you to see how we can partner the growth together. Thank you so much for this opportunity. Once again, welcome you here. Thank you.
I'll take a quick break on that note. On the other side, we're going to bring you a free masterclass when it comes to how you should be making and managing your money. That's coming up in just a moment. Do stay tuned. Welcome back. You're with us here on Leaders of Tomorrow. Tonight, we're bringing you the Leaders of Tomorrow Town Hall from Chennai, talking about, amongst other things, the healthcare space. In this segment, however, we're going to be bringing you expert advice on how you should be managing your money better, what perhaps are some of the good habits or strategies that you should employ when it comes to making your money work just that much harder for you. Listen in.
Mr. Krishnamoorthy, I think we all seek the freedom that affords us the luxury to live life on our terms. But it's all easier said than done. What has worked for you?
I'd say financial freedom is, at the end, the goal of all of us. At some point in time, you want to put up your feet and kind of, get that money coming. I think there are 2-3 prerequisites to make that happen. And the earlier we recognize it, it is better. So the first thing to be done is understand what our aspirations and needs are. It could be retirement for self, it could be children's education, higher education, so on and so forth. Second is to understand what is the time I have left to make this happen. And therefore kind of start working and start making those investments early on. Early investments help you get a head start as compared to starting it much later. I think these are 2 things I understood very early in life, and these have helped me. Obviously, I am a financial person too, so these are 2 things that have helped me immensely kind of make the journey.
Well, sir, look, cracking the code to wealth creation is difficult enough. But then when you put yourself in the current scenario, given all of the macroeconomic and geopolitical developments, it's very hard to distinguish, the saving strategy from the investing strategy, the age and stage of one's life at which to activate these plans and allow them to materialize. And I believe I'm not alone in speaking for our audience, and that many of themselves may find themselves in that same position. So how might you guide them to see the light?
Good question, Pooja. So just to kind of clarify and put perspectives to the 2 words that you used, savings and investments. Now, typically people use these words very interchangeably, right? And I just want to kind of bring my understanding of these 2 words. Savings is a very passive exercise. You earn money, you spend money, whatever lies in your bank account is termed as savings, right? So you don't have to do anything. You lie in your bed. If you don't overspend, there will be some savings available in your bank account. But investing is very different. Investing starts where savings ends. Investing is using what you have as savings to purpose it towards something that you want or desire. So let's say you want to invest in a house 5 years or 10 years later. Can you move some of your savings into something which can grow into a reasonable corpus so that it can support, apart from taking a home loan to kind of get your dream house? So this is where investing becomes very different. Now savings, like I said, you don't need much of a thought. It can just lie around. Investing needs a little bit of exercise to our gray cells. We need to put thought. We need to make things. And as you rightly said, the current environment, economic, globally, locally, is confusing even for experts, leave alone the common man, right? I mean, I'm equally confused as many of you all are. Which way is it heading, right? Is inflation going to come down? Is interest rates going to keep going up? Is the central banks globally going to keep increasing rates? To what extent? Is there going to be recession? No, no answers, believe me. As confusing as the viruses on the other, as per the panel, right? So, but having said that, history has taught us that as long as you are on the journey of continuing to pursue your goals through regular investing, I think many of these ups and downs that the market sees on account of these various factors gets taken care of. Economic upheavals are not new. The idea is to be disciplined irrespective of what's happening around you.
Well, Mr. Krishnamoorthy, as you know, Chennai is home to countless number of family-owned and operated businesses. And yet what we're now beginning to see is that third or that latest generation oftentimes has a resistance to joining the family business, which could mean building your own financial independence, right? Not necessarily receiving the nest egg that you thought was at your disposal because you've taken a different course, you've charted your own path. So for individuals in that situation, at what age, at what stage, and when do they essentially put the mirror to their own financial aspirations and plan towards them? How early is too early? How late is too late?
There is never a term called it's too early. I think when, wealth is very similar to health, guys. So my thought process is that like in health, you start exercising from a very early age. If you want to stay fit, it's important to have that discipline of workout on a regular basis. Wealth is very similar as well. The quantum may vary because the quantum is going to be small when you start up and is going to increase through your journey in life. So, but what is very important to get into the habit and the discipline of setting aside. So for every 100 rupees that you earn when you start your career, if you can put aside 10 rupees for saving, over periods of time, that habit will hold you in good stead. And that's what I would say more importantly. So there is no fixed age, but I do believe that when you start your career, you have limited amounts to put aside. As you grow every 5 years, I think it's important to pause and take stock of how much you're setting aside of your salary as a percentage. And if it doesn't significantly go up every 5 years, then I think you need to really look at the way your finances are. And by the time you're 40 plus, I think a significantly larger component of your pay must go towards planning for your kids' education or your own retirement and so on and so forth.
Wonderful. And there are many entrepreneurs in the room, and there are multiple avenues of financing that they are potentially considering, one of which is credit cards, all right? And when it comes to credit cards, oftentimes on the outside, the awards and the rewards seem very attractive, but so much is lost in translation when it comes to cashing in on them. The fine print, the nitty-gritty of it all, and that can overwhelm the end consumer. What words of advice might you have to navigating that challenge?
So credit card is a very useful tool, especially if you're an entrepreneur and you may not always have money on you. I have been in places like that. So it's extremely important to have a good credit card with you, which will help you see through that rainy day. But also important to manage credit because the cost of recycling credit in a credit card is fairly high. And sometimes you could get caught into a kind of a debt trap because that cost is reasonably high. But if you're using it smartly, like Pooja mentioned, if you can get those offers, use those offers, it just requires a little bit more attention to detail. If you did that, I think credit card is a great tool. But if you're somebody who isn't financially disciplined, I'd say don't even use a credit card. Yeah? Because it does involve a certain amount of discipline. It's like playing with fire. Credit card is a great tool, but has to be used really, really well.
All right. And you mentioned home ownership a short while ago, and I think the sad reality is that many homeowners come to terms with their credit score while they're making that first-time purchase. They have not taken the steps necessary to build and nurture that credit score, and then they're met with unpleasant surprises at a stage when they're trying to make their own dreams materialize. How do you avoid such a scenario? I think we've all faced it.
See, credit score is based on multiplicity of factors, the CIBIL score, so to say. But all of them are very logical. The idea is that you hold your credit dear to you. I think three simple things are very, very important. When you have a credit that you've availed of, I think it's important to be able to service it at whatever cost. And we live in a digital age where everything gets captured, right? So all those little details of missing a payment, bouncing a check, all of these can come back and haunt you much later when the rating happens. And all this data is available to CIBIL score for you. So first up is just be a little careful about managing your credit. Second is ensure that you have some kind of an emergency buffer that you create so that if in case you run short of funds to service your credit, you have a supply line somewhere which can feed into this. And third and last is, I think it's important to close loans, especially the high cost ones. Home loan is a good example of something that you can take on for a longer time. But if you have a credit card loan or if you have a personal loan, these are high cost loans. And I think it's important to find ways in which you can close these much earlier.
We can open it up now for question and answer. So if you have any questions, yes. Can we get the gentleman here a mic, please?
Sir, actually, I was doing a little bit of homework before I come here. And I found that Mr. Babu, he has very interesting lecture on the YouTube. And what strikes me most is that actually a long lecture that is on the learning from the business failure. Sir, could you please throw some light on technological aspect, startup aspect, in context to this seminar?
Sure. So he wanted you to throw some more light on learning from business failures.
Dr. Vishal alluded to the fact that if that idea is not absurd, it isn't an idea at all, right? So if the business is not difficult, is not trying to solve a very difficult problem, it is not a great proposition. I kind of completely resonate with that thought. So businesses will go through failure, which is why it's called an adventure, right? And I always tell this to people that when you run a business, you have two outcomes, and both are extremely good outcomes. One is either you'll make money, you will either learn or earn. Earn is money, or you will learn, you will get an experience out of it. And any entrepreneur must be prepared in even measure for both the outcomes at any point in time. Because if you don't learn, then obviously you're not going deep enough into that problem, right? You're just at the surface. So if you decide to go deep enough into the venture, then you will face failures. And failure is, this, as they say, the stepping stone to the next big success. So you will eventually succeed. And that's where I think is my philosophy.
Some nice nuggets of wisdom there. A huge round of applause for our guests.
Out of time on tonight's show. If you have any feedback for us, do let us know. Our details are on your screens as we speak. Thanks for watching. Have a good night.